So further clarity is awaited on that. But let's go to Nimesh. He can help us out with how is he reading the dealing room action. Nimesh, after a while, right? I mean, at 3 p.m. we ask you, Nimesh, what's going on? The markets are a little bit lower.
Yes, Nigel. In fact, there are multiple reasons today for the markets to have such a kind of a fall. The index is down 1%. The mid-cap index has seen a bigger run. That index is down 2%, but a lot of individual names are under pressure today. I guess the big reason is the global outage, which is impacting a lot of businesses and it's impacting the financial markets as well. I understand a lot of retail investors are unable to participate and execute trades, whether at a brokerage level or at a platform level. And some are facing problems with the custodian level as well. So that, I think, is one of the big reasons why you're seeing a big knock in the broader market stocks today. From a flow perspective, from the larger FIs, even there I understand there's a bit of forced selling as well in the leverage name. So that explains that the mid-cap index is down 2%. But look at the momentum sectors. All the high beta sectors, including metals, real estate, PSUs, all are down between 2 to 3%, 3.5% as well. So looks like that's where the pain seems to be. Also, remember, there is a lack of buying interest as well out of the big event, which is budget, which is next week. And in general, there is a bit of nervousness as well going into the big event because of the risk of maybe there could be something as regard to taxation. So even that's adding to a bit of pressure in today's market. But net, I guess a lot of retail investors have not been able to participate. And also there is a bit of forced selling, which has led to a big sell-off in the broader market stocks today.
All right, that explains the move, Nimesh. Thanks a lot for that. That's about the broader markets in general and markets on the whole, actually. But a lot of individual stocks on your radar. I mean, as we move into the results season, a lot of these promoter lock-ins and all these lock-ins begin. So does that still keep the deal street high when it comes to all the block deals, etc.?
Well, not block deals, but at least fundraisings, QIPs that are still pretty much on the cards. And even the non-promoter holders can keep selling blocks, right? So that seems to be something which is going to continue. But in terms of individual names, the first stock is ITC. Surprisingly, just 2 days before the budget, to see a bit of confidence in a stock like ITC is a bit surprising. So that stands out for me. There are very strong buy flows at FIDS is what I understand. So it looks like some institutional interest is back on that stock. And remember, the record date for the demerger of the hotel business is still pending. So even that seems to be a trigger to watch as far as ITC is concerned. The second stock is Jyoti CNC. Again, well, the stock has been consolidating. Today, with the carnage, even that stock is down 6%. But now I understand there's going to be a large block deal very soon in Jyoti CNC. And the last one is Vodafone Idea. Surprisingly, in the last few days, despite good news, that stock has been under pressure. In fact, it shaved off almost 12-13% from the recent highs. And one of the reasons is that one of the leading domestic mutual fund was an aggressive buyer in the FPO. They seem to be booking out some profit in Vodafone Idea, and that's been the key reason why of late there is high delivery-based buying or selling, and the stock is under pressure because of that reason.
Okay, all right, Nimesh, got it. Thank you very much for all the buzz and all the chatter there on the stocks that you've picked up today.